once the SEC will approve more assets, the consequence will also be that we'll see some staking products available. And at the same time, in Europe, we're trying to move from staking to let's say more innovative yield strategies. So I think these are the two aspects that I'm mainly looking at the moment.
Hello, you're watching Proactive. I'm joined by Fineqia International Senior Associate Matteo Greco. Matteo, very good to speak with you. Global ETP assets held above $200 billion for a second month in August. What does this resilience tell us about investor appetite?
Hi, Stephen. First of all, as usual, thanks for having me. Always a pleasure to be here. Jumping in to your question, I think the main point that we can observe here is the key difference between crypto native investors and traditional finance investors who are getting exposure to the asset class through regulated products, because they tend to be much less price sensitive. So we've seen in a month like August, where Bitcoin price went down about 6.5%, that the Bitcoin ETP AUM almost perfectly matched that. There's been some tiny outflows, but almost irrelevant. While on the crypto native side, we tend to have investors, especially short term investors, that are much more price sensitive and tend to get out much more quickly when they just bought and there's a negative trend. So this certainly reiterates how much more stable and the crypto ETP AUM is compared to the native market, and definitely brings more stability and positive visibility to the market and to the underlying asset class.
Bitcoin ETPs saw small outflows while Ethereum set new records. Matteo, what's driving this divergence, and is it structural or temporary?
I would say it's temporary, because we don't really have any points that suggest that the Bitcoin is losing its dominance in the market. It's purely how the market cycles works in the crypto space. We've seen Bitcoin dominating the market both on the crypto native side and the traditional finance side for 2.5 years. And now in the past couple of months, we've had a quite strong of what it's the so-called alt season, where the Bitcoin dominance drops, and the price of Bitcoin tend to remains sort of flat in a range, while the altcoins performs much better. And we've seen in the last month Ethereum and BNB, for example, hitting new all-time high. And obviously this great price performance that we observed in altcoins also led investors to try and get more exposure over these assets, especially Ethereum over Bitcoin in the past couple of months. But I would say it's just a temporary shift, that it's pretty typical in the market. It's just a market phase at the moment. I wouldn't say that the Bitcoin dominance in general is it any danger.
I mean, Ethereum ETPs attracted nearly $10 billion in 2 months, far outpacing price gains. Why are institutions piling in at this pace?
I feel like we are witnessing on the traditional finance space what happened in the crypto native space a few years ago, almost a decade ago, when Ethereum was started, and then from then onwards, it always been the second highest capitalized asset, while the Bitcoin, the crypto, let's say, exposure into the traditional finance space really became mainstream from January 2024 with the Bitcoin spot ETF's approval in the US. And from then, we had 18 months of strong dominance for Bitcoin. And I feel like now investors are starting to appreciate the value of not only Bitcoin, but the overall crypto market, and start to broaden their interest. So that led to strong investment into Ethereum, and of course also the price performance was really good. So it kind of one thing led to another. Price was good, driven more demand. Investors are starting to broaden their interest on the TradFi side things, and all things together just brought massive inflow in Ethereum based products.
Altcoin ETPs are up 30% this year, while basket products lag. What does this shift towards single asset exposure suggest about risk appetite?
I think again, might sound repetitive, but it strongly links to the answer before. It's a pretty typical pattern that we've always witnessed into the crypto market, where Ethereum it's the leading asset in terms of the altcoins pack, and once Ethereum performs well, then we see all the other altcoins also performing well, or the vast majority of them. And this is sort of what happening. Like Ethereum had a massive performance, and this brought positive externality to the whole altcoin sector. So we've seen some altcoins here and there performing well. We've seen increased demand also on structured products for altcoins. And as a consequence, being in this phase where there's so much focus on single asset altcoins, basket product are lagging a little bit behind compared to what we've seen in the previous quarters.
Uh, Trends or catalysts, what should we be watching for in the ETP space as we head towards the final quarter of the year?
I am personally looking mainly at two potential catalysts, I think, which kind of link one another. So we currently have in the US a massive list of filings that have been filed by crypto ETP issuers to broaden the range of offerings that currently just presents Bitcoin and Ethereum spot. So that's one aspect, because of course it would open the door for new investors for different assets and just allow people to purchase through regulated products more digital assets. And I think a second aspect is the yield generation associated with these assets, because of course TradFi investors are used to dividends and interest rates. And I think on this side we have in Europe, of course, staking and yield in general has been available for crypto for new phase of trying to find new strategies, as for example we are doing at Fineqia, where we're trying to plug in DeFi into structured products. And on the other side, I think in the US, we might see quite soon some staking products, especially after we might see new assets approved in terms of crypto ETFs. So I think these are the two main catalysts, and yeah, that might drive additional demand, and they're probably sort of linked to another, because I think once the SEC will approve more assets, the consequence will also be that we'll see some staking products available. And at the same time, in Europe, we're trying to move from staking to let's say more innovative yield strategies. So I think these are the two aspects that I'm mainly looking at the moment.
Matteo, thank you as usual for your insights. Great speaking with you.
Thank you, Stephen. It was my pleasure as always.
Matteo Greco is Senior Associate at Fineqia International.